is where you draw a distinction between medical care on the one hand and cosmetic services on the other hand, because cosmetic services are not considered to be medical care. And so if you get some of these services, there is a risk that you will be compelled to pay VAT for the service that you're getting. Or to put the proposition more realistically, there is a risk on the part of the clinic providing the services that they will get into trouble with the revenue if they're not charging VAT on the services in question. Now, some of these are quite straightforward. Migraines, I think we all know what are. Botox can be a great help for people who suffer from migraines. I have a client who spent about 10 minutes straight praising the efficacy of Botox treatment of migraines. Then you have things like hyperhidrosis, which is excessive sweating. This can be quite embarrassing, of course, if you sweat a lot. TMG disorders is things like clenching your teeth and things like that. It's usually stress related. There is a very large number of people in the UK who suffer from TMG disorders. I suspect that among tax professionals, the number is significantly higher than the general population. But Botox treatment, that is the solution to that problem. Then you have things like acne. This is not treated with Botox, but there is a bit of an argument there because acne is a recognized medical condition. And even though most teenagers get treatment for acne because they want to look prettier, you could make the argument that it is medical treatment because acne contains bacteria which are foreign to the body, and because the face being a highly visceral area, acne increases the risk of infection. So, scar removal, well, if you have a huge scar on your forehead, you might say that you're getting treatment because you want to look prettier, or you might be getting treatment because a scar is not something that's natural to the body. Wrinkles, you can probably not say the same thing about. Wrinkles can be treated with Botox. It's probably a difficult one. That's probably purely cosmetic. Tattoo removal, cosmetic possibly, although there might be exceptions. And I'll come back to why it's important that there might be exceptions. And then my favorite, lip enlargement. I personally think this looks a little unnatural, but I suppose it's up to one's personal taste. Case law. I'm not going to be talking very much about the CJEU case law. I'm very sorry to disappoint those of you who love CJEU case law. I personally find it very turgid and unappealing to read. I like our case law much more. But there are these two cases. There is another one as well, which I have neglected to include. But these two are quite important. Dambrumenil and Skatteverket. Skatteverket is the Swedish tax authority. And both of these cases were concerned with this sort of cosmetic versus medical distinction. And they developed this test, this interpretation of what is meant by medical services, which I will come back to in a moment. But this notion of it has to be a diagnosis or treatment or cure of health disorders, or the protection, maintenance, or restoration of human health. Then we have this Court of Appeal decision, MainPay, and this is interesting purely on account of being a Court of Appeal decision. But unfortunately, the facts of the case are a bit uninteresting for us because it was concerned with the NHS sort of lending out workers between themselves, and whether that was the provision of medical services. It's not really concerned with the treatment as such, but it does comment on the case law. But the FTT decisions, they are all concerned with this sort of area, with the exception of window to the womb, which is concerned with scanning services for pregnant women. And I'll talk a little bit about that decision because it was the only one of these where the taxpayer won, sadly. Because, well, 3 reasons, which I will show. One reason is that in many of these cases, the taxpayer's case was not that meritorious. Second reason is possibly because taxpayer didn't have good representation, in the sense that the requisite evidence and possibly the best arguments may not have been put to the tribunal, judging by the decisions, in my humble opinion. So this is the newest decision, the 2024 decision of aestheticdoctor.com. And the reason I want to spend quite a bit of time on this decision is because I think the judgment is actually very well written. It's very thorough and very informative, and it kind of has pretty much all you need to know about this area. So I did think this was a very, very well written judgment by Judge Anne Scott. It's concerned with the period 2009 onward, about a sort of a 10-year plus period. And one of the criticisms that Judge Scott made was that the taxpayer had almost no evidence concerning the beginning of the period and very little evidence concerning the last 2 or 3 years in question. The doctor was and is still in the business of providing aesthetic services, and there are some examples there: fat reduction, wrinkle releases, breast enlargement, facelifting, tummy tucks, and whatnot. And the argument that he made was that these were all medical treatments because the patients in question were suffering from a level of anxiety as a result of the particular conditions that they had. So, for example, let's say it might be a person who has many wrinkles, might feel less, have less confidence and so forth, but by getting this sort of treatment, the person might feel better and better about him or herself, or more confident, or whatever it was. So that was the argument being run by the taxpayer. Now, what happened was the judge went into, as I say, a very detailed analysis of the law. I'm not going to take you through the analysis because I don't think that it's very helpful. I think that basically the courts, both the EU courts and the tribunals here, have consistently said this. This is what you, at paragraph 287 of the decision, provided this test. This is, as Judge Scott puts it, do I find that the purpose of the services provided by the appellant in the round is to diagnose, treat, or cure health disorders? So that's sort of one leg of the test, if you like, or to protect, maintain, restore human health. That's the other leg. And so that's what the court will ask itself, and that is the test that will be applied to whether something is, as the European court put it, purely cosmetic, or whether it is something that is a medical treatment. Now, as those of you who are astute, perhaps unusually astute, will see, this gives rise to a number of problems. I will get back to this shortly, but in terms of this case, so you can see there, paragraph 298, this is the argument that the taxpayer was making. And the judge says, well, this does not assist. It's, aesthetic treatment is not the same thing as psychological treatment, she says. Because, it could potentially be, but there is a need, a crucial need, she says, to identify a health disorder and treatment, and for that to be evidenced, for there to be clinical, there to be evidence clinical reasons why a therapeutic result will occur. I think she's maybe putting the case a bit high there. I don't think she's right that you need to show that there's definitely going to be a result. So I think some sort of more experimental treatment, say, might actually come within the definition of medical treatment. But on the whole, you need to identify a health disorder and an appropriate treatment. And if the health disorder in question is a degree of anxiety because of the way that you look, and there could be such a thing. I mean, there are people who suffer from anxiety for good reasons. Then that is something that you need to identify positively as the doctor and document. And this is the next bit: lack of evidence. And she goes on in quite a little bit of detail. I sort of just chosen these quotes almost at random because she says quite a bit about this. But as an example, she says, well, in his oral evidence, Dr. McKeon, I hope I pronounced that correctly, Philip, Dr. McKeon, said that all of the patients in the clinic had some degree of anxiety about their appearance. This is what I was talking about. But it doesn't assist because they are referring themselves for treatment. So that means that they must be dissatisfied with some aspects of how they look. But that doesn't mean that their health is affected or that they're suffering from a health disorder. What they should have had is, well, almost some kind of opinion from a psychologist saying, according to the judge, that they need that they are suffering from some disorder, and then some sort of evidence that the treatment in question will alleviate that disorder. I will come back to in a moment why I think that's a bit problematic. Now, just a final point on the approach. There is this notion of the principle, the overall, or the in the round purpose for the treatment. And I think that the judge is using these terms interchangeably. I mean, she says that she uses the term principle, purpose because the upper tribunal does so. And then in the next sentence, she talks about the overall purpose. I have sort of been contemplating whether there is a distinction between these different terms. I think the distinction is mainly semantic, but I do think that overall purpose has a rather different flavor to it than principal purpose. Like principle sounds a bit like a dominant purpose, whereas overall sounds a bit like a generalized purpose. I don't know, but it's worth bearing in mind. But the deeper problem here, if you like, in my opinion, is that it's not very clear whose purpose you're talking about. And so in other words, are we talking about, let's say that I have some sort of Botox treatment. Is it my subjective purpose? Or let's take the example of a teenager who has acne and who's getting acne treatment. And it's conceivable that of 100 teenagers, there is one who doesn't care about his appearance one bit, and he just wants acne treatment because he wants to be healthy and doesn't want to get an infection in his face. It's possible. And so is it that purpose which is decisive in terms of the VAT treatment, or is it the purpose of the service itself? So is it the nature of the service itself that is decisive? Slightly philosophical question there, but you can probably see the implications, which again I will come back to when I talk about my criticisms of this test. So two other cases I want to mention quickly. There is EPIM Limited. This was Judge Anne Fairpo, and in this case, the treatments actually included Botox treatments for excessive sweating, headaches, and migraines. And I thought, Judge Fairpo is going to say something interesting about this being medical treatment. No, she did not. She said this. I was very disappointed. She does say that it may have, so some of the services may be VAT exempt supplies. And I think she means those two. I hope she does, but she doesn't say so. But there was no evidence before me on which I could determine the extent of any such exempt supplies, etc., etc. And the medical director's estimate in the hearing was not good enough, etc. So you need evidence, you need documentation. And if you're providing different kinds of services, exempt and non-exempt, you need to be able to quite precisely identify which is which, so that you can so that you can make a calculation. Window to the womb. This is, I think, a nice case because the taxpayer won, but also because you have these various services, well-being scan and heartbeat check and growth check and whatnot. So this is, as I say, these are tests for pregnant women to find out how their baby is doing. But these are scans carried out in addition to NHS scans and are not clinically indicated. Now, I don't know exactly what clinically indicated means, but I would have thought it means that they're not sort of reliable or real scans or some such thing. But nonetheless, the tribunal held that the principal purpose was diagnosis and monitoring, and that it was not just for reassurance, but that each woman was choosing to monitor her medical condition, and therefore these were exempt. So that was a nice victory for the clinic in this case. So how do we apply all this learning to these various wonderful conditions? Well, as I said before, I think migraine is clearly medical. I think hyperhidrosis is medical, even though the main concern is embarrassment. It's a recognized medical condition. I would be very surprised if the tribunal were to hold otherwise. TMG disorders, same thing. If it helps, I don't think that Botox treatment for TMG disorders causes you to look any different. Acne, difficult one. I hope I will get to argue this in due course. In the case that I'm doing, the revenue were given the evidence and explanations about 2 years ago, and they have been in paralysis ever since. The argument at the moment is about whether or not they should consider our evidence. So that's how low things have sunk at the revenue, I'm afraid. But such is life. But yeah, so acne, as I say, you can argue both ways. It is a recognized medical disorder, which does carry risks. But it comes back to this issue of, is it my personal reason for getting the treatment that's important, or is it the purpose of the treatment itself? Scar removal, I think, is medical. Wrinkles, usually not, unless it's connected with some medical condition. I always, when I think of wrinkles and in this sort of context, I think about the chap from the original Blade Runner film, the one who looked very old at age 20. I think he might have a good reason for not paying VAT on his treatment. Tattoo removal, there is an interesting potential exception there, in that
people on a regular basis and for some reason.
Was that a question? I wonder. Oh well, there is an interesting exception in connection with tattoo removal, because if you've had negligent or wrongful tattoo removal which has led to scarring, then you could argue that further removal of that tattoo is medical. So says my client anyway. Lip enlargement, I think you'd struggle with. Let's put it like that. Criticism. I think my problem really is with this notion of purpose, especially if it is the subjective purpose of the patient, because it's difficult to apply. Because suppose you take something like breast enlargement as an example. I'm going to try not to blush while I explain this. In the vast majority of cases, the reason that women have breast enlargement surgery is because they're concerned about their appearance, let's put it like this. But there are cases where women have breast enlargement because, for example, they've had breast cancer, they've had to have part of their breasts removed. And so you could clearly make an argument that in that case, aesthetic surgery is a medical treatment, because it's meant to protect, maintain, or restore, well, human health, certainly restore the body back to its original form. But how do you then document that? Are you going to have to say to the patient, well, you're paying £10,000 for breast enlargement surgery, Do you want to save £2,000? Well, go and spend £2,000 on getting a psychologist to certify that you're doing this for a medical purpose, etc., etc. It's a bit difficult, I think. The second point is that clinics, for anyone who has had any experience with them, are quite bureaucratic. The culture of medicine is a very bureaucratic one. They're used to complying with all sorts of regulations and procedures and this and that. I do a little bit of fertility law on the side, as it were, and I can assure you there is a lot of legislation about how you label blood tests and that sort of thing. That's what they're used to dealing with. And so if you go to a doctor and you say, well, I think that the medical procedure that you're about to perform is indeed a medical procedure. It's not for aesthetic purposes, and therefore I think you should not charge me VAT. It's going to be a little bit of a difficult argument to have, certainly with the nurse or the receptionist. And most clinics might not have the time or the energy to have that sort of argument. At the same time, if the clinic wants to take advantage of the more advantageous VAT treatment for medical services and say to the patient, well, we're not charging VAT on this service because we believe that this kind of treatment is medical in nature. Well, then the clinic can do that for 10 years, and then suddenly the revenue wakes up and says, well, not 10 years, but let's say after 4 years, wakes up and says, oh, we're going to make an inquiry. And by the time it goes to the tribunal, you have a 10-year period, and the clinic owes the revenue £1 million in VAT, or so say the revenue. So there is a real risk there. And because the test you apply is so uncertain, you can come to different views depending on the treatment, depending on potentially the patient. It causes a lot of difficulty. And again, as I say, if the clinic has decided that for this particular treatment it doesn't apply that, it's not going to inquire into the personal circumstances of each patient. So I propose that it might be more appropriate to have a medically recognized condition test, whereby there are certain conditions the revenue could make a schedule, or, well, Parliament technically could make a schedule, where certain medical conditions are recognized as being at least prima facie within the medical exemption. And this could be things like, for example, acne, because that is a medical condition. And even if the purpose of your average teenager is to look more attractive when undertaking that treatment, I think the revenue can afford to take a hit for the sake of a bit more certainty in the state of the law. And of course, there could still be a more flexible approach for treatments that are a bit less routine, such as the example I gave about, let's say, breast enlargement surgery for women who've had cancer, say. So that's my proposal. I don't think the revenue are going to take it up, but one can hope. The other criticism I have is that I think the evidential burden is unreasonable and unrealistic. I think that the revenue, on the one hand, they want evidence. In my own experience, if you give them evidence, though they won't look at it, they will say, well, we've made an estimate. Based on what? Well, we can't. Oh, it takes them a year to tell you. But in any event, in a case like aestheticdoctor.com, I think there is a degree to which both the revenue and the tribunal should trust the judgment of doctors, rather than demanding excessive or extensive evidence about why something might be a medical treatment. So finally, a bit of practical guidance. It's certainly important, especially if any of you are advising any clinics, to maintain the necessary documentation to show that something is that something has a medical purpose. And this could be This could be in the form of, well, three things, I suppose. Firstly, you might get some sort of declaration from the patient to say that the purpose of the treatment is medical as opposed to aesthetic. And of course, it's not going to be sufficient to have a generalized template that each patient just signs without reading it. You'll need to say something about the patient's circumstances, which warrant that VAT treatment. Query whether clinics are willing to do that, but I think that would be required. Unless it's obvious. I mean, if it's treatment for migraines, I don't think you need to get into the patient's circumstances. But if it's treatment for something that could be both, then I think you need to have some sort of record showing why you have decided that this should be exempt from VAT. The second thing you need, of course, is to have a justification as to why you treat certain conditions as being medical. And for that, and this is the second point, you need to speak with your doctor. So, in other words, the client. Doctors have an enormous amount of fascinating knowledge, both about the nature of these conditions and the treatments and so on and so forth. And I mean, in my case, with my client, we spent a good sort of 4 hours, I think, in conference discussing what is a medical condition. How do you decide what a medical condition is? It was a very philosophical discussion. And then we sort of applied that to the various kinds of treatments that this doctor offered, and it was a really good way of getting into the nitty gritty of it and coming up with the right arguments that one could present the revenue with. And I think we overdid it a bit because, as I say, the revenue have just been silent ever since. I wish they just drop it and not issue an assessment, but they're not willing to do that either. And then the final point is that if you do have an inquiry, then it is a good idea to try to get the revenue to agree some limitations to the scope of the inquiry. So what I did in my case was I agreed with the revenue that we're looking at this particular 6-month period, and that's it. We agree that this period is representative and we're not going to look at anything else. Now, they might change their minds by the time this goes to the tribunal, but I think at that time I will have a very good argument to say, well, you know, it's been X number of years, we don't have the handwritten notes anymore, and this was agreed by them and they need to be stuck with it. But in any event, what you do is if you agree the scope in some way, so period, you might agree with them that certain types of conditions are medical. So you're looking at a smaller number of patients, of patient cases. And then what you do is you find all the evidence for that period and for those conditions and so on and so forth, and you provide them with the evidence. That makes it much more manageable than a case like aestheticdoctor.com, where he had a 10-year period. He had to evidence everything for the whole period, and of course he could not. So yeah, it would be good to avoid a situation like that. Right, that is the end of my talk. Thank you very much.
Thank you very much, Patrick. Next, we have Shane, who's going to be talking to us about free goods and the VAT treatment thereof.
Just bear with me while I figure out how to get. Yeah. Well, this one here. Thank you. Yeah, so just by way of introduction, I'm Shane O'Driscoll. I'm a barrister at Old Square Tax Chambers. For those of you who are in the room, you will have a copy of the papers. And I'm assuming, or at least hopeful, that those who are online would have received a copy of the notes. If you haven't received a copy of the notes, please let us know and we will make sure that they get sent to you. The paper that I intend to present Sort of halfway through that the paper, there's a lot of legislation. So I've got extracts from the VAT directive, I've got extracts from the VAT Act, I've got some German VAT implementation of the directive, and then also some further legislation which I refer to during the course of the of this paper. So the paper itself, I intend to cover when the provision of goods for no consideration can nonetheless trigger a VAT liability. I'm going to divide the talk really into three parts. First off, just very general principles when that would apply to the provision of free goods or goods provided without consideration. Then I'm going to look at a recent European Court of Justice decision and its implications for UK VAT law. And then I will finish up the talk with a discussion around how decisions of the ECJ could be relied upon or indeed departed from by the courts in this jurisdiction. I apologise if I say ECJ as opposed to Court of Justice of the EU. I'm just showing my age from when I originally did EU law. Yeah, so first off, general principles. So deemed supplies. Under VAT, VAT is charged on anything treated as a supply of goods made in the UK. And the purpose of this provision is to bring within the scope of VAT supplies that would amount to taxable supplies, but for the fact that they lack some essential requirement, in this case, consideration. And in connection with which supplies in respect of which the person liable to account for tax is someone other than the person who makes it or is deemed to make them. The purpose of the deeming provisions is to prevent the final customer from benefiting from goods or services which have not borne VAT, and to simplify tax accounting and administration and to combat fraud. So a supply of goods is deemed to be made if goods forming part of the assets of a business are transferred or disposed of so as no longer to form part of those assets. A grant or assignment is made of any interest in or right over or license to occupy land forming part of the assets of a business so that it no longer forms part of those assets, and only if the grant or assignment is of major interest or made otherwise than for consideration. So it's the first portion of that which I'll be covering here today. So the provisions are contained in Schedule 4, which is in the set of notes midway through the bundle, and they're derived from the Principal VAT Directive. And namely, the supply of goods takes place where an asset of a business are applied for the private use of taxpayers or their staff, or disposed of free of charge, or applied for purposes other than those of the business. A deemed supply does not take place under these provisions unless the person concerned or any predecessor was entitled to input tax credit, or the importation of the goods to or by the person or of anything comprising them. And a predecessor is a person who transferred assets under the transfer of the business as a going concern or the person concerned, and the reference to the predecessor includes any predecessor of those, so along the chain of the disposal. Where a business is registered for VAT, but now intends to deregister, any goods held by the business on deregistration are treated as deemed supplies if those goods had input tax recovered on their purchase. And a business that makes a deemed or a self-supply will have to account for output tax on the supply, so there will be an output tax to pay on their VAT return. And this output tax will be paid to HMRC when the return is submitted, and deemed supplies will only be in point if a trader has recovered input tax on the goods or services in question. If you give away goods and are entitled to recover VAT on them as input tax, and you receive no payment or other consideration for them, you must account for VAT on their cost value. And this is unless they can be treated as a business gift. And a business gift is where there's a gift of goods made in the course of furtherance of the business, where the cost to the donor is not more than £50, and no output tax will be due on a series of business gifts, provided the total cost of gifts made to the same person does not exceed £50 in any 12-month period. And also disposals where there's a gift to a person of a sample of any goods also would be excluded from these deeming provisions. There is quite a bit of guidance in VAT Notice 700 of 7, which talks about how to account for VAT schemes on business gifts, samples and promotions, and provides numerous examples on how this operates in practice. But what I want to cover today is this European Court of Justice case, the YKG case, which gives us a sort of worked example of these provisions. So the case concerned the preliminary ruling on the interpretation of Articles 16 and 74 of the Primary VAT Directive on the common system of VAT, and the referral was made in proceedings before the company and the Finanzamt X, so a German tax authority, concerning the imposition of VAT on free of charge supplies of heat from the cogeneration plant connected to the company's biogas production facility to contractor A for the purpose of drying wood and to contractor B for the purpose of heating its asparagus fields. So the company operated a plant producing biogas from biomass. The biogas produced was used in 2008 for the decentralized production of electricity and heat, and the majority of the electricity generated in this way was supplied to the general electricity grid and paid for by the grid operator. The heat generated during the operation, so the byproduct of the operation, was partially used in Y's production process. Under a contract in November 2007, Y transferred free of charge the majority of the heat to contractor A so that they could dry wood in containers, and under a separate contract to company B, which was used to heat its asparagus fields. Both contracts specified that the amount of the payment was to be determined on an individual basis according to the economic situation of the user of the heat, without that payment being specified in the contracts themselves. So during 2008, in addition to the minimum feed-in received from the electricity grid operator, an amount of 1 million plus was received from the electricity grid operator, and a rebate under the German renewable energy law, that's it, the Erneuerbare Energiengesetz. So they received payments in return for the supply of certain kilowatt hours of electricity, and on the ground that it was electricity produced by cogeneration within the meaning of the law on the maintenance, modernization and extension of cogeneration of electricity and heat. You should see how that's written in German. It's a lot longer than the English version. So the 85,000 rebate was included, like the minimum fee, in the taxable amount of Y's taxable transactions according to its VAT return. And since Y did not invoice for the heat transferred to A and B, so the contract did provide that they could impose a charge, but no charge was levied. The tax authority took the view that the heat was applied free of charge for the purposes of point 3 of the first sentence of the German Umsatzsteuergesetz, so the turnover tax law, or the VAT equivalent in Germany. So it was given free of charge for the benefit of A and B, and in the absence of a purchase price for the heat, the tax authority calculated the taxable amount for that application on the basis of the cost price of the heat, in accordance with point 1 of the German provisions. And those provisions are copied in the notes in case you want to actually look at the specifics of the wording. There were a number of appeals, and ultimately both Y and the tax authority brought an appeal on a point of law before the Bundesfinanzhof, the Federal Finance Court, and the court grappled with the issues. At the end of them grappling with the issues, they decided that it was appropriate to stay the proceedings and to refer certain questions to the Court of Justice for a preliminary ruling. So the specifics of the questions, they raised three questions. So the first, if a taxable person makes heat from its company available to another taxable person for the latter's economic operations free of charge, in this case, allocation of heat from the cogeneration plant of an electricity provider for the benefit of an agricultural company, is this to be regarded as an application by a taxable person of goods forming part of his business assets in the form of a disposal free of charge within the meaning of Article 16 of the VAT Directive? And is the answer to this question dependent on whether the taxable person received the heat, uses it for purposes that would entitle that person to a deduction of input tax? And then two further questions. In the case of an application of goods within the meaning of Article 6 of the directive, is the cost price within the meaning of Article 74 of the directive solely on the basis of those costs that are subject to input tax? And then does the cost price include only direct production or generation costs, or does it also include indirectly attributable costs such as financing costs? So the court analysed the questions and provided some general guidance on Article 16 of the directive. So as regards the objectives of the first paragraph of Article 16 of the directive and the context of that provision, it's apparent from case law of the court that Article 6 seeks to ensure equal treatment between, on the one hand, a taxable person who applies goods for his own private use or for that of his staff, and on the other hand, a final consumer who acquires goods of the same type. And to that end, under the provisions, certain transactions for which no real consideration is received by the taxable person are treated as supplies of goods effected for consideration and subject to VAT. So the untaxed final consumption argument. The only exception to this position is set out in the second paragraph of Article 16, so samples and small gifts exception that I mentioned earlier on. The court looked at some prior case law of the topic, on the topic, and concluded with respect to the first question. So the answer to the first question is that the first paragraph of Article 16 of the directive must be interpreted as meaning that the transfer free of charge of heat produced by a taxable person to other taxable persons for the purpose of the economic activities constitutes an application by the first taxable person of goods forming part of his business assets in the form of a disposal free of charge. Within the meaning of that provision, that is to be treated as a supply of goods for consideration. Whether or not those other taxable persons use the heat for purposes giving them a right to deduct VAT is irrelevant in that regard. The court dealt with the second, and I suppose that the answer to the first question was unsurprising. You know, given the other case law that was quoted, I don't think there was anything unusual in that. But the court dealt with the second and third questions together, namely whether Article 74 of the directive must be interpreted as meaning that the cost price includes not only direct manufacturing or production costs, but also indirectly attributable costs such as financing costs, and whether only the costs subject to input VAT must be included in the calculation of that price. Article 74, again, is one of the articles that I've included in the bundle, states in broad terms that where a taxable person disposes of goods forming part of their business assets, the taxable amount shall be the purchase price of the goods or of similar goods, or in the absence of a purchase price, the cost price. And that cost price is determined at the time when the disposal takes place. So in the absence of a purchase price, the taxable amount becomes the cost price. So the court held that it's for the tax authority to determine the cost price in the light of all the relevant factors, and that determination involves a detailed examination of the value elements that indicate the VAT price, which must be determined at the time the application was made. And the court went on to state that it should be noted that it is no way apparent from the wording of Article 74 of the directive that the cost price should be based solely on the direct manufacturing or production costs, or on the costs which have been subject to input VAT, and also commented that Article 79 does not exclude indirect costs. So they went on to conclude that it must be held that the cost price should be as close as possible to the purchase price and include consequently both direct production and manufacturing costs and indirect costs such as financing costs, whether or not those costs have been subject to input VAT. And in light of all the foregoing considerations, the answer to the second and third question is that Article 74 of the directive must be interpreted as meaning that the cost price within the meaning of that provision includes not only direct manufacturing or production costs, but also indirectly attributable costs, such as financing costs, whether or not those costs have been subject to input VAT. So I think that the judgment, I would say, does two things. It clarifies that supplies of goods free of charge are subject to VAT, regardless of the recipient's tax status, unless they fall under one of the exemptions for low-value gifts and samples. And it also explains that taxable amount is based on the cost price of the goods, which includes both direct and indirect costs, which are subject to VAT. And this is clearly a very broad interpretation of costs, which may be problematic on a number of fronts, which in turn begs the question whether or not should this arise, or this type of an argument arise in the UK, whether or not one should argue against or for its adoption into UK VAT law. And I suppose on a practical note, taxpayer has to account for VAT on goods donated to another taxable business, and a simple nominal charge plus VAT for the goods could have avoided this issue, allowing the recipient business to recover the VAT and avoid the deemed supply rules. So looking now at the role of post-transition Court of Justice decisions and how they're interpreted in the UK post-Brexit. First off, to give a sort of very high-level reminder, so the UK ceased to be an EU member state on the 31st of January 2020. And on this date, the UK entered an implementation period during which it continued to be treated as a member state for many purposes and remained bound by EU law. The implementation period ended on the 31st of December 2020. And on that date, a body of EU-derived rights and legislation known as retained EU law was converted into domestic law. And the primary objective of the retained EU law was to provide legal continuity and certainty at the end of the transition period. On the 1st of January 2024, retained EU law that remained in force after the end of 2023 was recategorized as assimilated law, and that recategorization reflects a change in its status and treatment under EU law, in that assimilated law is generally to be interpreted according to ordinary domestic law principles. And from 1st of January 2024, the retained law is assimilated into domestic law by virtue of the fact it's generally stripped of EU-derived interpretive effects, so supremacy of EU law, directly effective rights, and general principles previously retained under the Withdrawal Act. However, there is a bespoke approach that has been introduced in relation to VAT and excess law, which continues to be interpreted by drawing on certain types of retained EU law rights and principles that apply generally before the transition to assimilated law. Specifically in that context of the VAT legislation, some of the original Withdrawal Act provisions continue to be relevant despite the amendments and repeals that were made to them. And the explanatory note from the Finance Act 2024, which introduced these changes, stated that this measure clarifies how VAT and excise legislation should be interpreted in the light of changes made by the retained EU Law Revocation and Reform Act of 2023. It sits alongside amendments made by that Act to the European Withdrawal Act, and the Revocation and Reform Act ends the supremacy and special status afforded to retained European law in the UK. And in relation to VAT, this measure confirms that it will no longer be possible for any part of the UK will no longer be possible for any part of any UK Act of Parliament or subordinate legislation to be squashed or disapplied on the basis that it was incompatible with EU law. It also ensures that the rule known as the principle of consistent interpretation continues to apply. So UK VAT legislation continues to be interpreted as Parliament intended, drawing on rights and principles that currently apply in interpreting UK law. The specifics of the Finance Act 2024 that are relevant is Section 28, which is also included at the back of the bundle. And that is treated as having come into force on the 1st of January of this year. And Section 4 of the EU Withdrawal Act continues to have effect for the purposes of interpreting VAT law, despite the repeal of Section 4. And however, Articles 110 and 111 of the Treaty of the Functioning of the European Union, which relate to internal taxation on products, do not apply in the interpretation of VAT and excise law. So the Article 110 and 111 of the Treaty on the Functioning of the European Union are also included in the bundle. Basically, it says no member state shall impose directly or indirectly on the products of other member states any internal taxation of any kind in excess of that imposed directly or indirectly on similar domestic products. And furthermore, no member state shall impose on the products of other member states any internal taxation of such a nature. And then 111 is where products are exported to a territory of any member state, any repayment or internal taxation shall not exceed the internal taxation imposed on them, whether direct or indirectly. HMRC have provided a policy paper on the implementation of the VAT law post 2024, which states that the retained EU Law Act removes the supremacy of EU law. However, to make sure there's stability, it was made clear when it was introduced that the bespoke solution would be introduced for the VAT and excise regimes. The bespoke solution, Section 28 of the Finance Act 2024, outlines how VAT and excise legislation should be interpreted in light of the retained EU Law Revocation and Reform Act. HMRC policy for VAT is unchanged. Section 28 of the Finance Act means that UK VAT and excise legislation will continue to be interpreted in the same way as it was before the 1st of January 2024, drawing on rights and principles that have always applied for interpreting UK law. However, business will no longer be able to rely on the direct effect of EU law. It will no longer be possible for any part of UK legislation to be quashed or disapplied on the basis that it's incompatible with EU law, as UK law is now supreme. And importantly, the amendments to the European Union Withdrawal Act made by Section 6 of the retained law will apply to VAT cases as they do more generally. And this includes the rules that courts must apply in interpreting legislation, including the application of case law. So I think, in summary, really, with those changes brought in by the retained EU law and the Finance Act 2024, there are significant changes on the rules of priority and interpretation, which is arguable, I suppose, that leaves some UK law unclear and uncertain until these points are argued in front of a judge to get solid direction. But specifically, in the event that a taxpayer wishes to challenge the costs element of this YNKG type case, Section 6 of the Withdrawal Act would suggest that there's more opportunity to argue against the interpretation adopted by the Court of Justice of the EU, although the judgment would no doubt be of persuasive authority to courts in this jurisdiction. Thank you.
Great. Thank you, Shane. Yeah. Yeah, that's the one. Thank you. To move things forward. Okay. Okay, thank you. Great. Thank you for coming, everyone. Just to pick up on what Shane was talking about, certainly if a similar situation arises, I think that, like Shane, I would certainly argue for the tribunal court to follow YKG. It's a post-Brexit case. The principle laid down by the CJU, as far as I know, has never been said before. It's not a reiteration of a principle that the court has laid down before Brexit, so we would regard it as new. It's clearly not binding. In my view, it's also clearly wrong. And I think that it's perfectly permissible to try to persuade a tribunal court to interpret the principle or the relevant domestic legislation in a slightly different way. And the reason I think it's wrong, and I think as Shane suggested in a nutshell, is because I think it is actually taxing something that was never a value received by the person making the supply. And that's probably one of the most offensive things you can do about VAT. So that's why, if that ever came up here, I'm with Shane. I would definitely argue that it's wrong. Anyway, that's not what I'm here to talk about. I'm here to talk about school fees. Both a very topical issue, and I think in the circumstances a little bit strange. School fees definitely topical, but unfortunately I'm not here today to talk about the actual legislation as it will be, because that's going to be in the budget in about 20 days' time. I'm going to talk about the draft legislation. I think very few people on the ground actually expect the draft legislation to change. I think quite a few people hope that it will be, and I think we'll touch on some of the reasons why it will be preferable, can't speak today, preferable if certain elements would change because of all the confusion it causes. But the government doesn't seem to be willing to budge. I mean, the lady's not for turning, as we keep reading in the papers. So anyway, let's go into it. First of all, we've all heard for about the last 3 years about how this government is going to charge VAT on fees. The first hurdle for them, of course, is that VAT is not charged on payments. It's charged in goods and services. So whether VAT is payable on a payment depends on what is being done for that payment. What is that payment made for? That dictates whether VAT is chargeable on the payment. So in looking at what a school does, why is it that no VAT is currently payable on what a school does? And the answer lies in, if I can get this, I can't move my slides. Nope, I seem to have, okay. I've done. Sorry. The reason that no VAT is currently payable on school fees is because school fees are payments for certain transactions, most of which fall within an exemption from VAT under the heading education. Now, all the exemptions from VAT, i.e. all the transactions on which VAT isn't chargeable, are listed in Schedule 9. In Schedule 9 itself, it's split into groups. So one of the groups is education. I've set out a very, very brief description of the key provisions relevant to most schools there. The most obvious one is the provision of education. There's also the provision of examination services, and then there's a reference to goods or services supplied by the school that are closely related to provision of education, and that is for the direct use of the pupil. These are the main exemptions that most schools rely on. So, at first blush, you would just say, well, why don't we just exclude private schools from the education exemption? Because then that would get you to a place where you can charge VAT on school fees. But it's not as simple as that, because especially if you look at boarding schools, is everything that a school does in relation to boarders, does that all fall within the education exemption? Or does it also fall within other exemptions, like, for example, the health and welfare exemption that Patrick touched on earlier? Because one of the items in the health and welfare exemption relates to supply by a charity of welfare services. Welfare services are defined to include the care and protection of children. So most schools, especially schools with boarders, will be caring for, supervising, and protecting children when they're on the premises. So if the school fee is split between education and health and welfare, for example, then part of the school fees would be taxable if you but part of the school fees, we're receiving signals from Mars. Part of the school fees will be taxable and part of it will be exempt. So therefore, to get the government to where it wanted to go, basically to charge VAT on school fees, it needs also not just to look at the education exemption in Schedule 9, but also others. Now here, you will see that I've grayed out a couple of exemptions. The exemption applicable to land, the exemption applicable to sport. I don't believe that schools are currently relying on these exemptions or relying on these exemptions heavily. But, for example, with boarding houses, if the government goes after boarding houses and what schools charge for that under the education exemption, the concern for the government was that, well, what if they just try to move the transaction into a different group? Like, for example, the land transaction. So I think all of these things were kind of going through the government's minds when it was crafting the legislation, which I think led to what they did. And what they did was then problematic. Like, for example, it's very easy to just get rid of the education exemption, but they can't do that because universities rely on that. So they have to look at whether they can exclude just private schools. But what's the point of excluding just private schools from the education exemption if they can then jump into the welfare exemption, if they can jump into the land exemption? So therefore, what the government decided to do, because the way that VAT works is that everything that you do in the course of furtherance of business is, in the first instance, subject to VAT, unless the transaction falls within the exemption, unless you take the transaction back out of the exemption again, which is exactly what they did. The idea, very simply, is what if schools simply can't take advantage of exemptions, full stop? And to do that, to block them from all the exemptions, the government invented a new part to Schedule 9, and then anything that falls in this new part 3, cannot take advantage of any exemption. But you can't just say anything done by a private school, because there is an exemption for charities and fundraising events. And whatever ideological problem you will have with private schools and the education they provide, if they're a charity and they're fundraising, why would you exclude that? So instead of doing something broad-based, like saying private schools simply cannot take advantage of the exemptions, what they did, and they probably thought this was helpful, was that they defined the circumstances in which a private school would be excluded from all the exemptions in Schedule 9. I'm not going to talk about vocational training. What I say about education pretty much applies to vocational training, except the definition. But the two key provisions, this is more or less word for word, from part 3 is the provision of education by private school. The bits I haven't included is unless it's provided in nursery. Again, we're not going to focus on that today. And item 2 relates to vocational training. Item 3 relates to provision of board and lodging, which is closely related to the provision of education. Now, some of the words in this slide are colored orange. That's because those are, with regard to these provisions, the key words. I should have also highlighted board and lodging, but the reason that I didn't is because these are the words that are, the orange words are the words that are actually defined. One of the things we'll touch on later is that board and lodging, curiously, is not. So I'm just going to get rid of private school first, because private school is one of these, you're either in the definition or you're not in. If you're a private school, if you look at the definition, you're in it, you're in it. If you're not, you're not. So education. So what we're now saying is that you will only pay VAT if the payment is for the provision of education by a private school. What does education mean? Now, if we were to ask someone in the street, they would just say, well, education is basically everything that the school does. Because like all the time that a pupil is with a school, they're learning, right? Except this is VAT. And the term was actually considered ages ago. And the court accepted that although the word education is capable of being used in a general sense of broadening the mind, there is a narrower sense. And for VAT purposes, we're talking about giving instruction, whether in the form of a class or a lesson or otherwise. The case was in 1999. HMRC have adopted this because in their own internal manual, they say that education means a course or lesson of instruction or study in any subject. The key word is instruction. And they themselves actually cite the example that if you're actually just supervising a child without giving any instruction, that is not education. So in fact, for VAT purposes, although to the layperson, education sounds like it's quite a wide term, for VAT purposes, it's quite narrow. And if we were just to go back to all the exemptions we looked at previously, if we actually look in the education group, the only thing that a school does that actually gets knocked out of the exemption is actually just the provision of education, which basically means that looking at the other key exemptions they rely on, schools rely on, examination services, they would still be exempt. Goods or services closely related to supply or provision of education, still exempt, unless they constitute board and lodging. And of course, because the only thing that is taxable is the provision of education, we'll get to board and lodging in a second, that means that actually to the extent that what the school does falls within the health and welfare exemption, it still would. Because of the way that the draft legislation does it, the only thing that gets knocked out is what would otherwise have fallen within item 1 of group 6, the bit that I've struck out in red. So before going further, although before the draft legislation was introduced, everyone was proceeding on the basis that come a certain point in time, everything you pay at school will be subject to VAT. That is not what the government has done. So instead, what the government has done is to say some of what you pay at school is subject to VAT, some is not. Question, how do you decide which bit's which? That's when you basically get a close for the day sign from HMRC. Currently, they're not providing any practical guidance on how this is done. For example, the government, the Treasury, the government on the day of announcing the draft legislation makes it quite clear, and maybe they think this is an act of generosity, they make it very clear that goods or services which are closely related to provision of education would stay exempt. Now, what exactly does that mean? In the case law in this area is quite confusing, so I won't go into that. But HMRC themselves in their internal manual accept that in order for something to be closely related to the provision of education, it needs to be direct use of the pupil, fair enough, as you would expect, but it also needs to be necessary for delivering the education to that person. Now, it then goes on to say a school may treat as closely related any accommodation, catering, transport, school trips, and field trip. So interestingly, HMRC say you may treat these things as closely related because I guess in the old regime where the result would be exemption, that would be a good thing. And for some of these items, that would still be a good thing. For example, if HMRC still accepts that transport, school trips, field trips are still closely related to provision of education and therefore would stay exempt, that would be a good thing from the parent's perspective, certainly. What about catering? What about accommodation? Well, catering, i.e. school meals, that was actually one of the examples that the government cited as a closely related item that would remain exempt. But then, wait a minute, because in looking at what would now be taxable, they've also decided that the provision of board and lodging, which is closely related to provision of education, would be taxable. What does board and lodging mean? Not defined. So let's look at what the dictionary says. Board means the meals that are provided with temporary accommodation. This is from the Oxford Dictionary on my phone because I couldn't get my hands on the Oxford English Dictionary. So it may not be the best definition. But anyway, the idea is that board means the meals you get when you're staying somewhere, and lodging means simply temporary accommodation. So back to the example that the government cited as an example of a closely related item. They said meals. Meals provided in what circumstances? Because if you're a day pupil and you get a meal and HMRC accepts that as being closely related, then yes, maybe the day pupil will have to pay VAT on the tuition, but the school meal should be free of VAT. But what if you're a boarder? If you're a boarder who's boarding in a house and you get your meal in the house that you're staying in, isn't that board and lodging? Say it is. But what if you go to school with a central refectory where all the kids go for their meals? Because then I would argue that's not board. Board is what you get in the place you stay. That's a different place. And if that's a different place, can I then argue, well, it's a closely related item, just as it is for the day pupil? And even if HMRC doesn't accept that, is the government serious in introducing a new policy where some pupils have to pay VAT on meals and others don't? Aside from anything else, it's a bit of a nightmare for schools to keep track. So that's one of the problems with the new system that the government has introduced. But what is more bizarre is that when they refer to wanting to tax the provision of board and lodging, they characterize this as board and lodging, which is closely related to the provision of education. Now, as we've seen, even in their own guidance, HMRC only goes so far as to say a school may treat as closely related any accommodation, because if we apply the test they themselves tell people to apply, ask the question, is accommodation necessary for delivering the education to the pupil? I would say not. Right? In fact, actually, when you're staying in the house, that's when you're not getting instruction. Right? So in the past, no one would challenge what HMRC say about accommodation, because that was generous to schools. Because even if HMRC are wrong, if by practice they accept that accommodation as being closely related, that just means it's exempt. Now it's the opposite. If taxpayers accept that accommodation is closely related, then it's taxable. What if we were to argue, no, it's not closely related? But that means that 1/3 of new legislation just falls down completely, because it doesn't actually get them what they want. So that's where we are. Now, to me, I guess, that's very interesting from a technical perspective. But for schools, the problems are real. Because if the government had been bloody-minded and just come out and say, no private school can ever take advantage of an exemption from VAT except for the charities and fundraising exemption, that means that every single payment made to a private school would be subject to VAT. That would be painful, but at least all schools would know exactly what to do. Or if the government changed its mind and say, no, we've changed our minds, we're not going to charge VAT on school fees, then fine. It will be business as usual, and schools will know what to do. Right now, you're asking schools to, one, take a view on what exactly board and lodging means. Why do they have to do that? This is new legislation. Why can't, if we're going to define private school, if we're going to define education, etc., why not board and lodging? Especially seeing as it's been pointed out to them almost the second they introduced draft legislation, meals are problematic. And meals is one half of board and lodging. Yeah. The second thing is, I get that there are benefits from the parents' perspective, but for schools, it's a bit nightmarish to have worked through what is education, and what is goods and services closely related to provision of education. Because you now need to look at the payment, and historically, how schools tend to charge was that parents would make a single payment to the school, most cases adjusted at the end of term. So you make a payment before the first day of term, you adjust it at the end of term. And that payment is for everything. I think that in some cases, you might be able to say, these items cost this, and you'll be able to do the breakdown. But for a lot of what the school does by way of its core business, it's not really as differentiated. And now, I guess what they have to address, schools have to address is, well, should we now start breaking down the core fee so we know whether all of it is subject to VAT or maybe just some of it? And there are schools, like the press reported, Etienne is taking the view that we're just going to charge 20% across the board. That's fine from the school's perspective. But what if one of the parents disagree with that approach? What if one of the parents is a tax barrister and says, wait a minute. Well, I say that, but as I was telling you, I had dinner with a UT judge. He has 2 daughters going to private school. When HMRC came up with their guidance on the same day that the legislation was introduced, he looked at it, he said, like some of what the guidance said, there was no authority behind some of what the guidance said. So, he was actually talking about prepayments. So if a school were to try to go back to him, as HMRC no doubt would like the school to do, to ask for VAT on a prepayment made before the 29th of July, he won't pay it. That's not a problem schools should be landed with. Because if the government wants people to do things in a certain way, they should actually make the law clear, and they should make their own guidance clear, so that schools, which never had to worry about VAT really for 50 years, would know what to do in the 3 or 4 months they were given to learn everything about this new topic. Instead, what the government did was to create a really confusing landscape where, you know, even practitioners struggle to understand exactly what it means and exactly what's happened. And then the government holds its hands up and say, well, we're sure it'll be all right on the night. Well, let's see. So that's kind of where the landscape is. I think one of the things, I'm just going back to this slide, because one of the things I didn't grey out, I set out stood in black, is the health and welfare exemption, because I think that even before the government announced draft legislation, there were schools which took the view that actually some of its activities fell within the health and welfare exemption rather than the education one. As we've just seen, just because VAT has to be charged under provision of education by a private school, it doesn't actually exclude the application of the welfare exemption. But what does actually welfare mean? And quite simply, it just means any kind of care, support, and protection of children. The only requirement to fall within, the only other major requirement that needs to be satisfied for the exemption to apply is you need to be a charity. Most schools are. So, question, what happens at the end of the school day when the child, let's say it's boarding school, and the child goes back to their house? What is the school doing then? Now, it's very easy for HMRC to say, well, no, what the school is doing is wrapped up in the education, but that doesn't make any sense given the very narrow definition of education from a VAT perspective. The school can say, well, it's wrapped up in board and lodging. I can see the argument if that's what they want to argue, but if that's what they want to argue, if that's what they want the law to be, write it in. Because board and lodging, as we've just seen, how can that possibly include things like looking after a child, like, for example, during study hours, including disciplinary issues, you know, if a child is a danger to themselves or to others, if a child has basically particular needs that need to be looked after. These are not activities that fall neatly. I mean, just the provision, or just the presence of a matron. You know, when I go hiking in some mountain somewhere, sorry, I never hike, but if I go hiking in a mountain somewhere and I stay somewhere, I don't expect there to be a matron, right? So, these are things that don't naturally fall within the definition, regardless of what HMRC think. And if they try to argue that, of course, it becomes part of board and lodging, then I think that just creates even more uncertainty for schools. These are things, given the very, very short time frame that the government deciding to basically launch this on the 1st of January as opposed to September 2025. Given the short time frame, the government should do a better job of making the law clear, or to the extent the law isn't 100% clear, making sure that HMRC provides actually useful practical guidance. There is also a sting in the welfare tale because as we saw, one of the new pieces of legislation, one of the new provisions would impose tax on board and lodging that are closely related to the provision of education. Whether that applies the way they think it does, arguable. More importantly, although supply of accommodation and catering with in conjunction with the provision of welfare, although on its face that is not exempt, if the provision of accommodation or catering that is ancillary to the provision of welfare, that would also fall within the welfare exemption. So unless HMRC changes, unless the Treasury changes the legislation between now and the end of the month and fixes the drafting problem with the board and lodging exemption, board and lodging provision, if it stays exactly the same it is now, then if one successfully argues that board and lodging is not closely related to the provision of education because it is not necessary to deliver the education, then one also opens the door to argue that it is accommodation or catering that is ancillary to the provision of welfare. And the thing, of course, is that some schools may already be doing this, as in providing welfare as well as education now. But again, if the legislation stays as it is, if these uncertainties remain as they are, then even for those schools who are not doing it now, they can restructure their operations and start doing it. And I think that that's another reason why I think the draft legislation is not particularly satisfactory. Because, and I mean, there's a slide which basically highlights the area where I think that just from a drafting perspective, the legislation could be better. And it certainly doesn't achieve what the government has told everyone for 3 years they were going to do, which is charge VAT on school fees. It's like what they've done is introduce legislation that charges VAT on a percentage of school fee, which is highly unsatisfactory because, you know, schools just quite frankly don't know how to work out those percentages. That's on the charging side. There's also the recovery side, which is the flip side of VAT, which I think that on that side, which I wasn't originally planning to cover, but I see I've got a bit of time, it's pretty much the same problem, because if everything you do is subject to VAT, if you have charge VAT on everything that you do, you get VAT back on what you pay other people, other suppliers. But if you don't, then you can't get your VAT back. And even outside of schools, for any business that charges VAT on some of its activities, but not VAT, but not on other activities, i.e. if it is partially exempt, partly taxable, partly exempt, then they always have to carry out this slightly complicated procedure where they have to work out how much VAT they can recover. And I guess technically what that requires you to do is it requires you to look at how the goods and services you buy in are used. And there are a number of proxies to apply that. You can look at the value of how much you charge your clients or customers. You can look at floor space, you can look at headcount, et cetera, et cetera. These are not straightforward or simple calculations. I think even on the more straightforward calculations where you just compare the amounts that you charge your clients that you charge VAT on and your clients where you don't, I'm not sure that those necessarily would produce a fair and reasonable result. So I suspect that a lot of schools, like a lot of businesses in the insurance and finance and healthcare industry, I suspect a lot of schools may want to agree their own bespoke apportionment method with HMRC. And I think even for practitioners and in-house accountants and lawyers who actually have done that for a number of years for banks, insurance, et cetera, insurance businesses, et cetera, that is never a straightforward process. So that is yet another strange complication that the government thought it was fair to impose on schools, and literally asking schools to learn about this esoteric area a month and a half before the school year starts, because as if they don't have anything else to do. Now, a lot of these comments that I've covered in this talk have been shared with the government, i.e. because they did ask for consultation and it was pointed out to them, well, this doesn't work as neatly as you might think it does. So far, we haven't really seen much sign of the government wanting to make the situation clearer. As I said, that might change in the next 3 weeks. And it might change in a way that makes it more certain that tax will be payable in certain circumstances. And although, as I said, that may be painful for parents, but at the moment, I think the concern that's really, really worrying the industry is simply not knowing what to do. And time's going to run out in 2 months' time. So let's see what happens in 2.5 weeks' time. If something really, really dramatic happens, and what I'll try to do is we'll try to put up what's it called? We have sorry, I don't understand technology at all, but apparently we can put something up on our Chamber's website as an update to this talk. So I'll look into that if they do change. So that's the end of my talk. And so I guess this is the part of the session where if anyone has any questions for any of the three of us. So, yes, of course. Yes, yes. Well, it depends on how much they spend and when they spent it. There is nothing that would exclude the application of the capital goods scheme. So certainly, if for any schools that have recently spent money on large projects, and by which I mean mainly land and possibly computer equipment, depending on what schools get these days by way of computer equipment. But I think in most cases, it's all about land renovations, purchasing land, etc. If they spend anything in the last, I would say, I mean, the capital goods period is roughly 10 years. But I think that if you're in the 10th year, the benefits are not going to be that huge. But I think even with the capital goods scheme, if let's say that you've renovated a building and the building counts as a capital item, and now you're going to make a claim based on the change of use, I think working out that change of use is also going to be an exercise in itself because of some of the preserved exemptions. Like, for example, if you've renovated a building that's used mainly for giving lessons, but it has a large hall that you also use for exams, then do you need to actually take account of the use for examination, for example? For all the others on this webinar, the capital goods scheme is basically a regime in VAT where if you incur VAT on acquiring what's called a capital item, the most obvious example is land, then instead of deciding whether you get your VAT back or not get your VAT back in one go, you can actually spread the assessment over roughly 10 years. And then you actually look at how that particular capital item is used during each of those intervals. So previously, because schools didn't have to charge VAT on their fees, they weren't able to recover the VAT. But if you're halfway, let's say 5 years into the adjustment period, come the 1st of January, when VAT starts being payable on school fees, then the schools can flip and say, okay, we're now using the property for mainly taxable purposes, and that would give them a right to recover a percentage of roughly 10% of the VAT they originally incurred. That percentage could well be 100%. It could be less depending on how exactly they use that building. Sure.
2 questions. Keep on saying private schools there.
Yes.
When I looked at the definition, I thought universities probably also do actually are below the age of 19 when they join. You are doing education there. At 18, still below 90, and still on the stage.
And there is one university in the UK, University of Buckingham, which happens to be my alma mater, which is a private university.
Yeah. So, yeah, I think the definition is meant to exclude universities because the easiest thing the government could have done was just to remove the education exemption altogether. But the reason they couldn't do that was because they didn't want to touch the exemption that's available to universities and undergraduate or similar institutions. But I haven't got the definition in front of me. I think the definition of a private school is only intended to catch people between the school ages. Yeah.
Interpretation of proposing I think some universities have to charge that as it stands unless they clarify.
Well, I must admit I haven't actually looked too deeply into because the definition refers to kind of like things which are within the kind of school's regulatory network. But if one of them, if it actually catches more than it does, then yeah, I think that certainly is something that the government ought to be aware of, because that would cut across some of the things that they're trying to do as well as everything else. Yeah.
Another thing, I'm just trying to work this out, the board and logic. So
Yes.
if you're saying it's closely related, which I'm take that presumption, would you not have to use a Tom scheme? So
not on care, because okay, because the board and lodging, well, my assumption, and I think I understand most cases, board and lodging would be provided by the school as principal. So it's not buying in the accommodation and it's not buying in the catering. I mean, the catering may be outsourced, but I don't think that's kind of quite done the same way, i.e. the staff may be outsourced, but not the actual catering itself. So, I mean, and certainly most accommodation would be owned by the school. So, but having said that, I think Tom's is definitely relevant if you're looking at things like field trips and school trips. But then the question is, well, are field trips and school trips still exempt as part of the closely related anyway? Well, I mean, but these are the areas that they should clarify. But yes, I mean, certainly Tom's is relevant in the areas where you buy in services like that fall within the kind of Tom's definition. And I guess these days there may be more things falling within the definition than before. After Uber. Yeah.
I think there's two questions in the chat.
Oh.
One seems to be from quite early on in the presentation, and then the other one seems to be relevant to this.
Why don't we do the early on one first?
I think,
So the early on is, how far back would HMRC go? Innocent error - carelessness. Well, I mean, this looks like, I mean, is this a VAT question, I wonder?
I think, I mean, on VAT, they normally, I mean, well, I guess what we're really looking at is when can HMRC assess? I think for VAT generally, they should assess within 2 years of the end of the relevant VAT accounting period. Having said that, they have a get out if they miss the 2 years, i.e. if they don't audit your business in those 2 years, but then information comes to light that something has gone awry. They have 1 year from becoming aware of that information to assess the business. This is assuming no fraud, et cetera, et cetera.
Yeah.
And then there is an absolute cap of 4 years after the end of the relevant VAT accounting period.
Oh, there is a clarification. It was about cosmetic VAT point.
It would
must
not be the same.
It must be the same. It's up to 4 years, isn't it?
Yeah, the absolute cap is 4 years. But if it's information that's already in their knowledge within the 2 years and they missed the 2 years, they missed the 2 years.
Yeah.
Yeah, it's a little bit more complicated than it needs to be. But,
I remember I looked at this a couple of years ago. It's very convoluted. is there a different cutoff point if there is carelessness or intentional or intent?
I think
Other than
intent, well, we have to look at what that means in practice, because if you veer into the HMRC alleging that maybe it was fraudulent, etc., that changes the landscape completely.
Yes.
But if it's careless, that's more a penalty issue, isn't it? Because it doesn't go to the power to assess.
Yeah,
It's just the carelessness affects the outcome,
yeah.
not the timing.
So I think the carelessness is more relevant to direct tax, where you get the 6 year, the 2 years extra effectively on top of the 4,
Right.
if the taxpayer is careless. But
Okay.
I think the answer to the question is that there isn't an equivalent concept within the VAT rules.
I don't think so.
I don't think so either.
Yeah.
So
Okay.
4 years, but the problem is that even if they begin assessing after 4 years, it usually sort of takes them quite a long time to get through, at least in my experience.
Oh yeah, it's just the start, not the end.
And that's why you sort of end up with 8 years worth of assessments or something like that, potentially.
Yeah.
Okay, the other question is, could the new law be challenged because it is not fiscally neutral, for example, because it could hit an industry and school close, or because private tutors are exempt?
Okay. Okay. Fiscal neutrality is built into the fabric of the VAT, the principal VAT directive. So basically, the tax itself is not supposed to have a distortive effect on business. But that is not part of the UK VAT system. That's part of the European VAT system, which basically what Shane said earlier about how Brexit affected UK law. So that becomes relevant because although the principle of fiscal neutrality pre-existed Brexit, so therefore it is part of assimilated law, it is part of UK law, despite Brexit. One of the things that changed with all the Brexit legislation, and I can't remember whether it was in the Withdrawal Act in 2018 or whether it was in RULA, which is the Revocation Act, which was when 19. But basically, although for VAT purposes, the principle of fiscal neutrality is preserved, you can no longer invoke it to quash UK legislation. So there's no question that what the government is doing has fiscal neutrality problems. But if you can't invoke it to quash the legislation, I'm not entirely sure I could see how it could be usefully raised in litigation. I think it certainly is one of the bases on which you can challenge legislation, because there is clearly a difference in treatment of exactly the same transactions between different taxpayers. But if you can't quash the legislation, and I guess this is the point where Parliament regains its sovereignty.
Could you run an argument parallel to, say, a Human Rights Act type argument, where you say that it should be interpreted in a way to avoid, in a way to facilitate fiscal neutrality?
I think certainly you would throw it in if you're running an ECHR argument. I think with the ECHR, the bigger question is how far does one think the UK courts would go on a? I mean, I think it has to be. I think the argument itself has to be tweaked in a way that actually makes it a little bit more like an ECHR claim, because historically, just saying that I have a problem with the government in my country imposing this particular tax because it takes my property, that has never really gone down too well with the courts, and they've always been quite reluctant in interfering with countries' ability to tax. So I think that an argument under ECHR probably will have to be a little bit more nuanced than just saying you're taking my property away, because I think, yeah.
Could you make an argument along the lines of, well, there's a lot of doubt about this concept of closely related and order lodging, and so the court should interpret this in favor of the taxpayer in order to facilitate fiscal neutrality, say?
I would I mean, I haven't really completely thought it through, but I would probably look more to discrimination, unequal treatment, things like that. And maybe something that, I mean, at the end of the day, I think that there's a kind of capitalist underpinning to all the European principles. I mean, this clearly is act, tap, and choice, for example. So I would be looking into more of those sort of areas rather than the pure technicality of the legislation. Yeah. Sorry, any more questions? No? Well, thank you everyone, both those here and those online, for joining our webinar. And as I said, if there's anything by way of updates come the budget, I will try to get it on to our website. But otherwise, thank you for coming and have a great night.